Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be doing some spot tests on a few stocks to see, hey, are these great value opportunities? Are these actually value traps? Obviously, the stock market has melted down quite a bit, and there's tons of stocks out there that certainly look like great long-term deals, but we're going to put them to the test with a few names here today. Now, before we jump in here, let's talk about some of the basic criteria. Here's some of the things that I'm going to be looking for and highlighting in this video. Current valuation versus the last 12 months, and of course, versus other stocks in the sector. Next, we'll look at forward revenue and earnings growth, at least from a projected level, right? How are these companies growing over the next 1 year, 2 year, 3 years? Are they making more money and more earnings, which will, of course, help in terms of valuation? Or are they past a, let's just say, pandemic peak where things perhaps don't look as good in the near-term future? And then lastly, we'll look for some momentum signs, right? How are analysts looking at these stocks? How have revisions and guidance changed here over the short term, and how does that compare to where things might look, say, a year from now? So let's jump in with the first one, and that is Micron. Flipping over here to Seeking Alpha, take a deeper look at Micron. If you're interested in learning more about this platform here that I'm using, Seeking Alpha Premium, my affiliate link is in the description. It gets you a free trial and 50% off your first year, so definitely check that out. But in terms of Micron, we're at 58.36. We've got the 1 year chart here, and you can see that Micron has not been immune to the stock market meltdown. They are in the chip sector, which has been hit just as hard as anyone. You had a peak in here of $95, and that has melted all the way down. Looks like our most recent low was approximately $55 back on June 16th. And you look off to the side and you see that Micron gets some strong ratings, right? Wall Street has it as a strong buy. Seeking Alpha Quant Formula has it as a strong buy, and so do the Seeking Alpha authors who write on the site. And they've got valuation of A, growth of A, profitability of A, and then momentum and revisions coming in that C plus to B mode. But let's go a level deeper than just these shiny colors. Let's look at some of the numbers here for ourselves. So we talked about the importance of valuation, both currently to the sector, and of course how the valuation will look in the future if they're hitting their projected revenue and EPS targets. So as far as gap on a trailing 12 months basis, okay, so sort of looking backwards right up to today, Micron has a PE, a gap PE of 7.08, the sector median 24.33. So at least compared to the sector as a whole, I mean, Micron, this initial read here versus sector median, very encouraging, definitely suggests a lot of value to be had there. Now we need to think about the forward gap PE ratings. You know, this is based, again, it's based on EPS and revenue projections, but which way is it going? And on the bright side for Micron, it's going down, right? So that's what we want to see. We'll dig in a little bit, but that should mean that the EPS is going up. Or perhaps they're having a stock buyback of some kind. But you certainly want to see your PEs go down at the current price when you look across time, 1 year, 2 year, 3 years, etc., because that suggests that the fundamentals beneath it, the revenue and the profits, are actually going up. You bought it today at however many dollars, so you stay consistent. Revenue and earnings go up, and your sort of cost basis PE comes down. All right, now thinking about revenue, we're going to think about revenue in terms of price to sales, at least on this particular screen. So 2.02 in the trailing months. That is lower than the sector average at 2.93. Now, before we go any further, while it's good to check where Micron stands versus the sector, keep in mind that the sector is a pretty big conglomeration of stocks. So sometimes it's good to go back and see where Micron's sort of historical price to earnings ratio has been to give you a feel for, how high or low of a multiple can this stock trade at. So for that, we just take an eyeball look over here at Macro Trends. This is a free website that you can look up historicals on. And if we go, let's just say the past 5 years, let's see, P ratio is down here in the bottom. And you might remember that Micron's forward PE was in the sixes. I think it was 6.22. Now that is the PE going forward, not the PE over the last 12 months. Last 12 months, I believe it was in the sevens on Seeking Alpha. So we think about the 7, or more importantly, looking ahead, the 6 number. So if we keep that number in mind of the 6s, and it looks like if you go back all the way to the 2017s through 2019, you did have trailing P ratios, some of which came in a little bit below 6, but we don't really know the news story here. What was going on? Was Micron actually growing? Very, very hard to tell from this graph, but I'll say one thing, a forward PE of a 6 with growing revenue and EPS, I think is a pretty strong standing, and at least worst case scenario, just eyeballing this graph, I would say that it is a fair value at the bare minimum. So if we can just settle on the fact that Micron's probably a fair deal from a P ratio standpoint, certainly based on its sector and certainly based on historical averages of the stock itself. Now we have to think a little bit more about where does the future put Micron stock. And the important thing to keep in mind here, at least for this channel, is that we're long-term investors, minimum 1 year, ideally 3 to 5 years. So how does Micron look going forward? And to do that, we're going to go closer into the numbers on the earnings estimates on an annual basis. So as we come down here to the table view, I always think this is the easiest one to look at. Looks like their fiscal period ends August 2022. So they'll actually start a new fiscal year right around September 1st. But for 2022, current estimate 9.45. Year-over-year growth of earnings, right? And this is the key, 55%. And you got a high-low range of 855 to 1026. The forward PE for this fiscal year, right, the one that ends on August 2022, that's coming in at 595. So this is good. This is even lower than what we saw on the other page for the forward PE in the 6s or so. August of 2023, now they're talking about $11.65 plus, again, plus 23% growth. So you're growing, which is the important thing. The forward PE drops even more. So in my opinion, these are all excellent, excellent signs. Now on the revenue side, you've got 20% growth projected, and you've got 16% growth projected for 2023, brings your price to sales certainly under 2, and if you go 2 years out, it's at 1.61. Okay, last thing to look at for this stock is how is our momentum going? How are our revisions going? How has the recent news in quarterly reports as well as the economy affected what Micron is doing? And at least over the last 3 months, you've had 23 EPS projections up, you have 4 EPS projections down, revenue 25 up, 2 down. So I think in this case, Micron appears to check all of our boxes. There are very few signs of a trap, at least the way things stand right now, for Micron stock. Now let's go to a completely different sector and talk about Carnival Corporation. Obviously the cruise lines did the very best they could during the pandemic. They're hanging on by their fingernails to get through an impossible time where people aren't even able to travel. And if we look at the 1 year, I'm kind of curious how the 5 year looks because of the pandemic. You had a little bit of boom here right before the pandemic, call it $50. obviously down to 1048 today, but you might be able to say, hey, the worst of the pandemic's over, right? Let's talk about going forward with Carnival, and perhaps the future's bright. Certainly should be brighter maybe than $10.46. But let's take a look at the numbers just like we did with Micron. All right, first we'll compare to sector median. And the tough thing with CCL right out of the box is there's no PE ratio, right? There's no positive earnings yet. And at least from the forward metric, which is supposed to insinuate the next 12 months, it does not appear that they will produce a profit over the next 12 months, at least on analyst calculations. The sector median here falls between that, call it 12 and 10, depending on if you're looking at GAAP or non-GAAP, trailing or forward. But how about revenue, right? Because the revenue should be getting better. So price to sales ratio 3.12, that obviously encapsulates some of the pandemic closures, right? So let's look ahead. Let's get out of the past. And this is promising, 0.74 on price to sales, and that would actually be slightly lower than the consumer discretionary sector average. So a good sign in terms of revenue. Okay, from historical valuation standpoint, it's just tough because they don't have a PE ratio right now. It does look like, somewhere in the neighborhood of 12 maybe. 12 to 13 on the trailing PE ratio would be a good place to get into. Now let's try to figure out when CCL will come back to profitability, at least from an analyst standpoint. Doesn't look like it's this fiscal year, coming in at minus $2.50. However, that is growth, 65% growth, right? In November of 2023, so basically the forward PE ratio, if you think about the fact that most analysts will be looking at that after December of this year, you have an EPS estimate of 1.42 and a forward PE of 6.8. Now that does happen to be lower than a lot of what we saw with CCL back historically. I think we are in the 12s or 13s. Some of this, though, might be because they're not paying out a dividend. Right? So when you pay out a dividend, you give up some profits, your PE goes up. Hard to really tell, but generally speaking, I would say good sign here as far as EPS projection to be profitable into next year. Now on the revenue side, November 2022, 600% growth. You don't see that in a corporation very often, and it's obviously because they were closed for a certain part of this fiscal year. And then you have projections for fiscal year that ends November 2023, still growing 52%. Price to sales drops down to basically 0.5 at this level. Even this year, your price to sales, your profits aren't there, but you're under 1 on price to sales. It's a good sign. Let's take a look at the momentum. And this is sort of a mixed bag. Last 3 months, now this is for the upcoming quarter, so it is hard to say. That's pretty short term, but you had 2 EPS estimates coming up. You had 9 going down. Revenue also a little shaky, only 1 up and 9 down. So my opinion here with Carnival, I guess I would say it seems to me that if you're willing to hold 3 to 5 years, almost a bare minimum of 2 here, then it's probably worth the risk. You have to compare it to what other opportunities you have out there. But I would say getting back to the profitability is a huge step for them. The fingers crossed moment, though, is if they come out with all this inflation and whatnot and say, actually, we're not going to be EPS profitable next year. And that's going to, if that were to happen, be a huge momentum bust for CCL stock. So dig in closely, make sure that the guidance for next year continues on. You likely have some time to get this one. I would say certainly under $15 or something like that. You probably have some time. Just make sure you feel good about 2023 and 2024 before you jump in. Next up, we got Micron Technology, maker of Invisalign braces. This is a stock that I've followed for a while, particularly when I was holding on to the Smile Direct disaster that I owned there for a little bit. And you can see what's happened here, similar to a lot of stocks, right? You got $727 was give or take the high over the past 52 weeks. Now you're down to $250. But let's dig into the numbers and see how things are trending. On a non-GAAP basis, your non-GAAP PE is going up, albeit just a hair. And it's also a little bit over the sector median. But if we go to GAAP PE, which is arguably more important, you have a 28 trailing 12 months, and you have a 27.48 in the forward. So, you know, basically flat, not the best sign, but a little bit better than negative. And these numbers are right in line with the sector median. So 5% within 7%. That all looks good. From a revenue standpoint, let's see, price to sales trailing 12 months, 4.91, right in line with the industry. And price to sales going forward, that does come down, not by much though. So they might have some limited revenue growth. We'll take a look here in a second, but it is in line with the sector. Looking at macro trends for our historical averages, when this company was smaller, if you go pre-pandemic, man, you had PE ratios, 39, 40, up to 100. And then it got into the 50s, settled into a 50s channel. I see a 30. Then you hit the pandemic and everything got crazy. So if I had to make a guess, I would say, your average PE ratio across all these crazy numbers is probably between 30 and 60 somewhere. Keep in mind that the numbers we saw on the last screen, right? 27, 28 on the forward PE. So it's definitely trading below its historical averages. But let's take a look at the fiscal year projections from a long-term standpoint. And we get in here for December 2022. If they hit 1014, that would actually be negative EPS growth for the year, minus 10%. So something, maybe it was inflation costs. You never know what drives that. And it is a projection that could change. Now, December of 2023, that fiscal year, which really we'll be looking at only 6 months from now, now you're back in the green, plus 25% at a 12.73 projection. That would bring forward PE down to a 20, which is obviously much lower than what we saw on a historical basis. Checking out revenue numbers. This year, $4.26 billion. That is 7.69% growth. So still growing the top line. Price to sales $465. Next year looks like that this is going to be the year, right? So 2023 revenue jumps 17%. So you're back to double-digit growth, right? On the top line, price to sales under 4. And you're back to double-digit growth on the bottom line, giving you a historically low PE. All right, on the revisions front, not a ton of good news here, but keep in mind it is the upcoming quarter, right? And so this is not revisions for the future. This is for the upcoming quarter, but you got 0 up, 10 down, 0 up on revenue, 9 down on revenue. So, but when I look at a line, it's very, very similar to CCL, right? With these two stocks, I'd be inclined to say a line is a good value right now. And I think the same holds true for CCL in the sense that we need to hold this one for 3+ years. That part is very obvious. And then I would advise anyone to dig into those investor reports, try to figure out how rock solid 2023 is, right? Because we have the shifting landscape, inflation, interest rates, the deal. How is that going to impact things? And for that, you've got to go to the guidance of the corporation, and you've got to look at where the pain points are now and ask yourself, do you think these will get better in the future? All right, guys, value stocks versus value traps. We went through 3 different examples. I think Micron feels really good, and I think the price, $58, and the sector that they're in with semiconductors, I think it's very, very strong. And I do believe you get a dividend with Micron, but double check that. As far as TCL and Align, I just said it, looks really promising. I would not put either of those two in the straight up value trap category, right? I would say that they are leaning hard towards value for the long-term investor. The big question really is 2023. And in this wake of uncertainty, how well do you think that they'll hit their 2023 projections? If they do hit the projections that we saw, then I think they're obviously value plays, and these are good prices to get them. All right, guys, let me know what you think about these three names, value stocks or value traps. Leave your comments below. Don't forget to check out that Seeking Alpha special offer in the description with my affiliate link. I hope everybody's doing well, and we will see you on the next video.